diversified or asset allocation funds tracked by Morningstar, 370. Only one managed to beat the major stock index, the S&P 500. In fact, out of the last 15 years, there have only been 13 years when diversified portfolios have outperformed the S&P 500 because of that concentration in the mega cap growth stocks. How do you make sense of this?
Well, I think it's very important to recognize that it's not just that we've got concentration. That concentration is getting more and more intense. So the top 10 stocks in the S&P 500, of 500 stocks, the top 10 account for about 35% of market cap right now. The United States accounts for about 64% of global stock market capitalization. So there's a huge amount of concentration in mega cap names in the United States. There's a huge amount of concentration in US stocks. And the problem is that when you've got this calm, soft landing economy is just chugging along, what's happening is people are doubling down on what's done well recently, and that's causing more and more concentration risk. And the thing about diversification is of course there's always going to be a strategy that did better than that, but sooner or later you're going to have a shock, and when you have a shock, those things that are overpriced are most vulnerable. So I would urge people, every year they print your returns. They don't print the risk you took to get the returns. But people are taking more and more risk if they're heavily concentrated in large cap US equities. So that means international equities, it means small cap. It also means alternatives. We put together a guide to alternatives, just looking at all the sectors of alternatives, and really given the opportunity set in public markets, but also the risk in public markets, it makes sense to diversify not just within public markets, but also within private markets.